And so let's talk about interest rates a little bit. And Robert, I want to, before we get into talking about the Fed and Mike's part, I want to ask you because, I feel like we've seen a surge in our business the last couple of, months. And obviously I know interest rates play a part in that because it motivates people, but I also think the unknown, or not necessarily unknown, but the unspoken victory in a lot of this is interest rates having come back down to where they were maybe a year and two ago when they were a little higher, I think has helped prompt a lot of home sellers that were fence sitting and saying, look, I don't want to go out and move up and buy because my rate will be so much higher on my purchase than what I'm at now. Now that they're down, I feel like a lot of those sellers are saying, okay, let me sell and go buy another house.
Well, I think a year ago, it was about a year ago now, rates jumped up so quick, so fast. And that combined with really low inventory in the market, it kind of scared everybody into just sitting still. Mm-hmm. And what we saw kind of mirrored what we were seeing nationally, where everything just kind of slowed down a little bit. And it seems like over the past few months, they shot up really fast, kind of like gas prices, and they slowly went back down. Right. But now that they're back down to a comfortable spot again, well, more than comfortable historically,
sure,
but more in line with where they had been for a while, I think people have gotten off the fence. They've jumped back in the market. There's more inventory available now. I really think the market has loosened up a little bit. And
sure,
while a lot of people were afraid of it, and of course it could loosen up even more, but I think what it's done is it's made everything flow a lot easier. Sellers that want to sell are able to actually find something. Buyers that want to buy are actually able to find something.
A lot less antsy.
Yeah, it's
a
really,
lot less pressure.
It's really gotten the business to move along. Yeah.
Yeah. So we're seeing more transactions, more listings and more transactions, and I think both because the pressure is kind of off a little bit. People now are less concerned about some, the bottom's going to fall out, and rates kind of alleviated some of their concern about the payment on their buy, but also it is create a little bit more listings in the marketplace.
Yeah, and it is a little weird because over the course of the last year, rates did go up on, the Fed rose rates, but
sure,
mortgage rates actually came down. So, the other day, the Fed actually lowered rates, so it'll be interesting to see what mortgage rates do.
It's a good point for Mike, because I think a lot of people out there, Mike, probably make the assumption that when they see the Fed make a change to the long-term interest rates, that it has like this immediate, that somehow they're going to call their mortgage banker that day and their rates are going to change, and it doesn't work that way.
It's funny you say that. The day they lowered rates, I actually got text from my friends and said, what does this do for mortgage rates that goes out there, and it gets out there into the mainstream media, and it's the headline, and everybody is talking about it. One thing a lot of people don't know is the federal funds rate, when they talk about cutting the rates, that is actually a short-term interest rate. It's an overnight interest rate in which banks lend money to each other. And it really has nothing to do with the long-term interest rates that are mortgages, that equate to mortgage rates. A lot of the anticipation that they were going to do this, they telegraphed it very clearly. They said they were going to do it. They came through and they did it. There was no real surprises. So a lot of the drop in the mortgage interest rates that we saw was part of that already being baked in. And so one of the concerns that a lot of people, the insiders, had when they actually cut was, would mortgage rates actually tick up? Well, the good news is they stayed somewhat stable. They didn't tick up. They didn't tick down either. So we're still in a really healthy place, and the long-term projection is that they'll probably, drop further slowly, and there won't be these big exacerbated moves that you were talking about, Robert, that cause like these ruffles in the market.
Yeah, and again, not to go overly political, but there's definitely been some Twitter bashing that I've seen on the news from the current administration, as well as certain politics and the chief of the Fed and all that, about what they should do with rates, and so it's interesting, because I think a lot of people have that misunderstanding, and I think some of the people even in politics don't quite grasp it, but the reality is that an increase in the Fed rate or a decrease in the Fed rate doesn't necessarily mean it's going to have an impact in the near future on mortgage rates. There's times where it does the opposite. So, we have it happen all the time where people are like, oh, well, didn't the Fed change rates? Well, no, I don't think you understand how it works. That's not exactly what we're talking about. So we're going to continue this conversation. We're going to talk a little bit more about the Tampa Bay real estate market with Mike Corrigan from Cross Country Mortgage, Robert Johnson, president of Duncan Duo Team, and I'm Andrew Duncan. And make sure to follow all of our socials. We are at The Duncan Duo, Twitter, Instagram, YouTube, Facebook. We do put videos up from the radio show as well as our podcast up on our social channels, so make sure to follow them if you miss any segment of the show and want to listen back, or if you heard any tips that might be relevant to someone you want to share them, go on social, feel free to tag them on any of our social channels. So we'll be back after a quick break here on the Duncan Duo Show.